Good evening, good morning, good afternoon, from wherever you are. Okay, it's evening here, and as always, it's always a pleasure to be on the space like this to share my thoughts on topics like this. And it's good listening to Norman and Madison, and I'll say that. I really like how Maddie, dials the tension, because it's almost like there is the wind of negativity, around the entire space, and it was really good hearing all those things from her. So I'll just so I really feel like there are a lot of things that the traders, do not know, especially those who come from my region, regarding how the brokers operate. And I know that Norman has said a couple of things about this, but they do not have, an in-depth knowledge. So I'm very, very sure that they will understand my language better. So I'm going to take it gradually, and then hopefully we can head somewhere with some of the things that I will share. Okay, so the first is you see, Forex trading in general, will usually come with I like it when I think it was the first speaker, was it Tolu, that said that the traders want to make money and the brokers as well want to make money. So you cannot take that part away. The traders are protecting themselves, and the brokers as well are protecting themselves. They are in business, all right? And if you don't know, the broker is just the middleman. All right, it's the same thing you get with a broker, a real estate agent. They're just the middleman. If you have a yacht you want to sell, you're going to need a broker, a yacht broker. All right, somebody who deals in yachts, to look for a buyer. All right, so you have a yacht to sell, you need a broker. All right, so in trading is similar. The brokers usually report their data to liquidity providers, okay? Because as traders, if you have anything less than $100,000, you will most likely not have up to 50 million in terms of your trading volume in a month. So you can't go directly to the ECN. And the ECN is a short form for electronic communicating network. I know you must have heard of that word or that ECN thing, and it's just the broker telling you that we are giving you feeds directly. Okay, we are giving you feeds directly. What you get is the real price. On what you see on our platforms are the real price. They are actual ECN is not available to retail traders because of their low volume. All right, and then the real ECN guys, such as Hotspot, where the actual trading is happening, they are retail traders cannot go there. All right, so you need a broker. Okay, so if your broker is an ECN broker, like the IC markets, you see the raw spread, it means that the spreads are almost not there. Right, the spreads are almost not there. Is you can get this, you can get the spreads like zero on Euro USD. Okay, but remember that these guys are here, they want to make money, so they always have the commission, that comes with it. There's the $7 commission, $5 commission, and all that. All right, so I particularly prefer, that type, because if there's no spread, if the spread is minimal, it means that your TP is most likely going to get hit, and your SL is less likely going to get filled. So That's one thing that traders can be aware of, right? There are traders, there are brokers who are not charging commissions, but they take spreads, two peep, 3 peep, depending on whether it's major or the other minor currencies. Okay, and the issue of regulation, I would say that it's not the first time. We're looking at props today. It has started with the brokers a long time ago. I feel like it evolves, and whether we like it or not, it was bound to happen. I remember in 2017, IC Markets, Pepperstone, they stopped providing services to Canadians. They completely stopped. Okay, and if you're wondering, see, the thing there is the regulators, they understand that leverage, all right, is one of the reasons why traders blow up. Okay, so there are brokers who are going to give you unlimited leverage. Some of them going to give you leverage of 1,000, right? If you're using a leverage of 1,000, it means that you can over leverage. Your buying power will be so high, such that if you are a trader that is prone to over trading, you're gonna get burnt faster. And I say this from first-hand experience. Okay, I use IC Markets, and I use a leverage of 1:30. It's a pro account, 1:30. And what that does for me is, if I want to open a position on my account, there is a limit to what I can buy in terms of position sizing. It means that if I want to take another trade, I will first close the initial trade. All right, so that I'm sharing this so you understand the difference. I'm saying 1:30, and I'm comparing that to somebody who has 1:1,000, 1:1 unlimited, 1:100. You can buy as much as you can buy GU. If I take example for $100 account, if you have $100 account and you use a leverage of 1:30, you can only buy 0.02 of GBP. 0.02, because 0.01 is going to cost you about $45. Will cost you $45. So if you open 0.02, your margin have been used up. Almost $90 have been used up. So you can't place any other trade. And that's why you see the regulators, they don't want the brokers that issue or that offer services to the Canadians and maybe the US. They don't want them to use those things, because it is usually more detrimental than the advantageous. So I told you that they had to, when the regulators stepped in, some brokers had to stop providing services. And because the prop is here today, when I heard it, I just felt like, okay, this is just going to happen. All right, I knew it was just going to happen. All right, and what they would do alternatively is they take the offshore regulation. They go to Australia, they go to other areas, right? They are looking to bypass those things so that they can offer the leverage. And I'll tell you, brokers take the A book and the B books. Okay, and I was talking to the CEO of my flash funding, and I asked him the question. And he said that A booking, B booking, is not a problem. The problem is the trader. If you A book a trader, if you don't know what A book means, A book is an agency model. It is called STP. It's an agency model. All right. STP means straight through processing. All right. Another word is DMA, right? That's the direct market access. A book is think about A book as the wholesalers, all right, the actual institutional traders. This is you're trading directly your orders, what you're placing at home on your MT4, MT5 is sent directly to the source. All right, that's what A book means there. And then on the other hand, you have B book. The B book is what most of them do, because the majority of the traders are not profitable, and some of them who are profitable cannot sustain the profitability. All right, I heard Antonio say the other day that you see a trader who has been trading on EU, average stop loss is 10 pips. He has been doing so well for 3 months, 4 months, and then all of a sudden that same trader is scalping gold with 10, 20 standard lot size. If you A book that trader, you're gonna take a loss, and that's not profitable. That's not sustainable. So you see why it is very difficult for the props. It's very difficult, and if you don't get it yet, the reason why the props may be able to bypass the regulations is because the prop firm does not come out as the brokers. The prop firm they sell demo accounts, and that's what is on paper. So what they're saying is, what we are offering is a demo account. We are not offering real money to traders. Okay, and I'm just adding this. All right, they're not coming to tell the traders that, okay, what you're doing is real money. All right, they outrightly tell you that. They outrightly put it there that we operate on demo. Okay, and just so that I don't forget to add that, the good thing with that is, if they have a third party broker, it's gonna be beneficial, because the only thing they have to pay for is the MT4 bridge. Right, they have to pay the MT4 bridge, which is around $5,000 to $10,000 per month. All right, because they are not the one giving the service. So what we now say is, if you are a broker, if you're a prop, you're at an advantageous point if you have a third party broker. All right, and I'm not going to mention the names, because I'm sure the ones that have their own. MFF have their own. They are their own broker. They do not have a third party. All right, and let me share something on that. See what that means. If we say somebody is their own broker, all right, what is going to happen? What is going to happen is that there is a possibility that there can be manipulations. There is a possibility that there can be manipulations. See, is it the same way it was before? No. Initially, before the regulators stepped in, it was fierce. It was higher. It was more intense. All right. I'm talking about the issue of manipulations and all of that. All right. So with the strict regulations that we have now, the slippage and all of those things are drastically reduced, and that is because if there's a third party where the tick data is sent to, every broker sends see why they cannot cheat you outrightly is because the data, the price, when you place a buy and sell, that data, the tick data, is sent to a third party. This is the advantage of regulators. If the broker is regulated, the regulators have access to that data, that price you bought. So if they compare it to another broker and another trader that placed trades around that same period, and they see that you have been cheated, all right, we see that, okay, you bought at 9,000, but you were stopped, right? You were stopped, and then the other guys were not stopped. They're going to look at the tick data that is sent to the third party at the regulators, and then traders can make these complaints. You can make a complaint directly to the broker, tell them, I was stopped on this trade. I am not supposed to have been stopped. Because on my maybe data feed or whatever, any other area you're looking at the chart, the price have not gotten to that point. So why did you stop me on this particular MT4? Why did you stop me? Now the broker is supposed to attend to you. If they don't attend to you, you can go to the regulator and then make the complaint. So if MFF is having the issue they are having today, I'll say is probably because there've been a lot of complaints about the slippage, and that's why the regulators have to step in. That's why they have to step in, because they are protecting the traders, they are protecting the citizen, the people that the service is rendered to. And that's why you see some of them now are trying to go offshore, get the other countries that are not in the United States and in Canada, because Canada is strict with balance protection, leverage. They are strict with those things. They cut the leverage. I think in Canada the maximum is about 1:33. Most pairs are around 1:20. That's the maximum leverage you can get. All right. So the thing I would say is the brokers, they have their way of operating. If they are regulated, it is good. But the prop, I tell you this, if the props get regulated, it may not be good for the trader. It may not be good for the trader. One thing that will happen is that the price of getting, Norman said that, and then it's true, okay? If you want to trade for a proprietary firm, you need at least a 2 years track record. Meaning you need to show that you have been trading on a live account for about 2 years. And then you need to take some tests and then take some interview before you can trade the kind of money that prop firms make available for you. All right. So and then these are people that are regulated. If an online proprietary firm, an online prop firm, as we have today, gets that regulation, it may not be good for the traders. All right, and I stand to be corrected on this, but in my opinion, it may not be good. Madison said something. She said that the profit share will be cut down. All right, what's it called? The price to purchase the account will increase. If you buy a $10,000 account for $100, the amount you're going to be buying a $10,000 account is going to increase. I don't know by how much, but it's definitely going to increase if regulators come in. Again, the rules will be more strict. How many traders are able to meet up with the rules that we have? You still see, I think, I don't know who it was that said that they have 98% lose, and that's why the model is self-sustainable. If you have a prop firm now, an online prop firm, it's self-sustainable because a lot of traders is going to get burned. A lot of traders are going to lose. A lot of traders, if they pass phase 1, they will not pass phase 2. If they make it to phase 2 and then get the live account, they can blow that live account that same day they get it. And then they get the live account. How long can they keep it for? So the model is self-sustainable. All right, it's self-sustainable. So I would just say the only thing I'll tell you is, and I know that you may not understand that part, is what is harmful to them. I'm talking about the brokers, the prop firm. What is harmful to them? What is harmful to these guys is what they call the toxic flow. Toxic flow is arbitrage. Right? And if you don't know what arbitrage means, in simple terms, it is just simply saying that the price that you are getting on your MT4, all right, is better or different from the price that they are getting, all right, from their liquidity provider, of course. All right, so it's different. So if they continue to collect your order, the order you're putting on the MT4, if they continue to collect that order at that price and they are STPing it All right, and they are STPing that price. Remember, that's the straight through processing. They are sending that price to the liquidity provider. They're gonna get shut down if they do it for too long. Okay, because if the liquidity provider cannot cover for that arbitrage, if they cannot cover for that change in price, all right, they're gonna withdraw. They're gonna stop the broker from using their platform. All right, because the liquidity provider is supposed to do that thing directly with the real market. Okay, so you can see that there's a lot here, and this is particularly what Norman was accused for. He said that he has some high tech level stuff that he was using to get data faster. So if the 5 minutes candle is there and he buys, right? He buys. It has not reflected yet on the other area, right? It has not reflected on the other area. And so what that does is that he's making money, but the prop firm says that they are not making money. All right. So I think I would just stop here for now, because I really want to hear from the other guys that are here, because I can go on and on about this. Because see, I would just tell you, if you're a trader and you're listening to me, see, I'm not saying I asked Blake, he's Flash Funding CEO. I asked him, if you have to absolutely accept the regulators, will you be willing to do that? And then they said yes. All right, but I'll tell you this. What that means is that the rules gonna get strict, and it may not be favorable for the traders. And I'll say this: if you are a profitable trader, if you know what you're doing, the prop will continue to be a profitable investment. It will continue to be a profitable investment as long as you know how to trade. You have your edge. You know what you want to see, and you continue to execute that thing consistently. You're going to keep making money from the prop firms. All right. And then, because of the skepticism, I would also say that you should diversify. Don't put all of your eggs in one basket, because maybe you are, I don't know, you are friends with anybody, right? Take every prop. Right, you don't know which one's going to go. We thought that the MFF, they were the big guys. They've been there, for a long time, but they're not here anymore. So there's no guarantee that whether it's a new one or an old one is going to stay. There's no guarantee. Okay, so just diversify. If you have $1 million, $200,000, 5 different prop firms, it's not going to hurt you if anyone goes under. All right, so I'll just leave it at that for now. Okay, thank you so much for the time here. Always a pleasure to speak with you, Tony Sniper.
Thank you, sir. Thank you, Trader.